Welcome back to another episode of The Investment Advisor. I'm your host, Matthew Stevenson, in partnership with Dukascopy TV. Remember, money can take care of you, it cannot take care of itself. Today I wanted to look at the revolution that concerns bicycles, and bicycles as a global market. Far more bicycles are produced every year than automobiles. That's not always been the case. 15, 20 years ago, it was about 1 to 1. Now many more bicycles are produced, ridden, and the question is, you as the investor, can you make money with a bicycle? I think you can, but I think it's going to be a little hard and it's going to be a wait because there aren't many public companies out there servicing the bicycle investor. Many bike companies, but most of them are family owned. So I thought today we'd look at Shimano. Shimano's traded on the Tokyo Stock Exchange. You may know Shimano. Well, that looks like a hill that you could climb with one of its bicycles or its bicycle components. But Shimano's been a very successful, publicly listed stock. And what does the company do? It makes parts for bicycles. I'm not going to go into all the different components of a high-end bicycle. Shimano makes them. They make them very well. They're probably the leading manufacturer of the bicycle high-end component market. I thought of other companies we could look at, and Giant is a good example. They own the Chinese market, company out of Taiwan. But let's look at Shimano because really 2011, 2012, they were bumping there at $30, $40. This is on the ADR side, and now up to $151 a share. Very successful. But one of the reasons that Shimano has been successful the last 3 or 4 years is more and more people have taken to their bikes. Shimano has sold more parts. They pretty much doubled their revenue and doubled their net income. I'd give it to you in yen, but it wouldn't mean a lot. Take it on faith that these parts, this is what Shimano would be making, maybe not the frame of the bicycle, but certainly the components. So the question is this, and I think as an investment idea, it's a good one. More cities offer bike share programs. London does, New York does, maybe the city where you're watching this program, let's hope they do. More and more people are thinking, I don't need to sit in traffic. I can take my bike, I can maybe take a folding bike and ride on a train and then bike to my office. It's a very popular global way of getting to work, getting to a store, getting to see your friends. I bike to this studio to record this program. I can tell you it works. The hard part is at $151 a share, here's a quick release on one of the Shimano wheels. $151 here is 27 times earnings. Richer than I would normally recommend a stock. I'm a value investor. I don't like paying too much. I wouldn't want to pay too much for a bicycle. You're getting quality with Shimano, and you're getting a story that I think is probably going to keep growing. They've got markets in Asia. They've got markets in the United States. It's a popular brand. It's a well-managed company. What I like about Shimano is as the revenues have grown, they've been able to hold down their expenses. So the expenses have been in line, and the company's success falls through to the shareholder. I think it's a good management, and I think it's a good product. It's expensive, but I think you're getting quality. That's all the time we have today on The Investment Advisor. I'm your host, Matthew Stevenson, in partnership with Dukascopy TV. Remember, money can take care of you. It cannot take care of itself.